Okay, Darius, we are live. Welcome everybody to Wall Street Reporter's next super stock live stream for today, December 9th, 2020. We have back with us once again FansUnite. We have Darius Agdami. He is the president of FansUnite, FANS. Let me just put up that banner right there on the screen so people can see the symbol. And for those of you who are joining us for the first time, what our live streams are about is to bring you those stocks with 10x to 100x upside potential. So these are stocks which right now are at key inflection points. They're going after multi-billion-dollar market opportunities, and there are multiple catalysts in place which can drive that stock price appreciation in the coming months. And of course, Fans is a very good example. That stock is up, I don't know, is it 300% the last few weeks, a month, whatever it is. But of course, Darius, our audience, they're looking for 10 baggers plus. So yeah, don't rest on your laurels here. We need to see the stock a minimum of $2-3 a share before you could relax. So I'm gonna turn over the presentation to you, and I'll come back for the Q&A. By the way, everybody who's watching, it's your questions that make really these events. So you gotta ask your good questions, and then decide for yourself if Fans is going to be that next big super stock, the 100 bagger that we are all waiting for. Okay, Darius.
Hey, Jack. Can you see my screen, Jack?
Yeah, you're ready to go.
Perfect. Thank you. Yeah, no, we won't be relaxing anytime soon. We got a lot of work ahead of us, so we're pretty excited here. So Jack, what I'll do is I'll do a high level overview of the company. I'll do a bit of a corporate presentation and show you guys some demos of our technology of our games, and then we can get into Q&A if that works. So as Jack mentioned, we're trading on the Canadian Stock Exchange symbol FANS. We're also on the OTC QB under the symbol FUNFF. And we're a sports betting company, a technology company. So, first and foremost, we'd love to talk about the industry. We're talking, about a massive industry, right? Online gambling is a $150 billion plus type industry. Gambling across the world, there's estimates that it's over $1 trillion industry. So we're playing in a big space, right? So this is why we're excited. And another reason why we're excited is because we believe we're at a major inflection point. FansUnite isn't a new company. We've spent years and millions of dollars building out our technology, validating that technology, bringing on an amazing team, and now we're really ready for that growth and scale that we believe we should be able to accomplish here in the next 12 to 24 months. And so we do have a lot of catalysts. We also have a lot of milestones we've hit in the last few months, which has been great for us as a company. And I think we're just scratching the surface here of what we're able to do. So here is a snapshot of the company overview. So FansUnite is the parent company. Through a couple acquisitions, through some mergers, here are our subsidiaries. So we have FansUnite, of course. We have Ascot Entertainment, which is a deal we closed in August, a merger. And then we have our UK sportsbook called McBookie. And I'll talk about each one of those as we go through the presentation today. And below, you'll see just some of our assets, the Chameleon Gaming Platform, our games division, and a couple of our own B2C brands with Vamos and esports bets and pools. So I just mentioned the execution. So, we start with August because August is when we completed our merger with Ascot. And that's what really was a transformational type deal. And to give you guys a bit of a background, so we went public in May. Our stock came out. We had our UK sportsbook. We were doing pretty well. And of course, it was during the pandemic. And I've actually known Scott and his team for about 7 or 8 years. I've had a really close relationship with Scott and Ascot. We were a traditional sports betting company. We wanted to get into esports. And Scott and Ascot were going along their own go public strategy. They were esports pioneers, being in the industry for years, one of the very, very early adopters of esports. They wanted to get into traditional sports betting, and they were getting ready to go public themselves. Scott and I had a great chat. We decided, this is an opportunity to do a transformational type deal to become a full suite iGaming platform provider, from esports, from sports betting to casino, why don't we look to merge? Let's merge our technology, let's merge our teams, let's merge our board, and let's try to create one of the global leaders in the iGaming platform, in the iGaming world. So we decided to do that. We made an offer to merge with them. We did a brokered financing as part of that. We oversubscribed that, which was great. And our deal closed in August, and we hit the ground running, which is pretty cool for any M&A, right? For us to be able to have a seamless kind of transition was amazing. I think, large part was that because a lot of our team had worked together, Scott and I had known each other, and, we're both Canadian companies working out of the same city, which is pretty cool. So since then, the first announcement we made was a partnership with GameCo. We really had no plans. Well, we did have plans, but not initially to go into the US market this early. The US market is fragmented, it's expensive, it's time consuming. And so we always had that on the back burner. But then a partnership opportunity came up through one of Scott's relationships with GameCo. They're a bricks and mortar casino cabinet manufacturer in the US with a great network, with great licensing. And we are going to be the technology to go in with a partnership with those guys to be able to launch esports sportsbooks into the US market. So this is our entry point into the US. It was a huge announcement for us. And now we're, of course, working towards launching our very first esports sportsbook in the US. In October, we then launched a partnership with Pinnacle, one of the global leaders in the world for sports betting. They're probably the largest esports book out there as well. They've been doing esports since 2010. And so we did a partnership with them to take on their data and their odds into our Chameleon platform. And this was huge for us because we're going to be the only reseller right now of this the data and odds, but they have the best markets, the best odds, the best risk management in the industry. So we're able to provide this to our clients and give them that full suite of esports, which a lot of other companies aren't able to do. And then we signed a deal with the EAR platform. So I'll talk about our games division a little bit more in depth as we go along. But our Ascot Games is one of our newest divisions. We're building in-house casino games right now. We have a few built, and we signed a deal with the EAR aggregator. So the EAR has access to over 120 plus different sportsbooks and casinos around the world. And what you can do with this is, with one integration, our games can potentially go out to over 100 different sportsbooks just with a single switch. Those casinos can turn on our games, and then we're able to generate rev share on those platforms. And we're looking to sign, more aggregator platforms. We want to get our games into, hundreds and thousands of different sportsbooks. And then one of the biggest milestones for us was our October numbers for McBookie. So we did put out a news release early in November. McBookie had their biggest revenue month in their 10-year history, which is amazing for us. So that was one of the big reasons we bought McBookie. We thought there was a lot of low-hanging fruit, a lot of room to grow there, and they were up over 400% year over year, which was huge for us. And then we also uplisted to the OTC QB. We wanted to get on a bit of a better exchange, get some more eyeballs, get some more US investors looking at our company, which I think was great for us. And then just a couple of days ago, we hit one of our biggest milestones, and that was getting our Malta licenses. So we got 2 licenses in Malta. This has been, months of work to get these. Malta's a tier 1 jurisdiction. Our team went through rigorous technical audits to be able to pass and get our Malta licenses. So we have a B2C license, we have a B2B license, so we can launch our own brands as well as actually sell our technology to other operators out there, and they can piggyback off of our licenses. And so we're super excited about that. That just happened on Monday, which was a big milestone for our team. So this is just kind of a snapshot of the last few months, but as mentioned, there's a lot of growth catalysts we're excited about moving forward in 2021. So here are some highlights of the company as a whole. So we do have a few arms to our business. We have our B2C side, we have our B2B side, and then we have our games division. We currently have 4 B2C platforms live. So these are platforms that we own, that we run, that we brand, that we market. These 4 platforms have over 300,000 registered members on them around the world. We've done over 350 million of betting volume on these platforms since inception. A lot of that is our UK sportsbook McBookie. And then on the B2B side, where we're actually white labeling our technology out to other operators, we have 4 deals signed right now. 2 of them are live. There's more coming on, which is amazing for us, and we have a great pipeline. Right now, all our B2B is being completely inbound, which is why we're excited for 2021, because we're actually going to put a full business development team out there to go out there and get more operators to use our platform. And then, as I just mentioned, we've signed 2 major partnerships with global brands, with Gameco and Pinnacle. So now I'll talk about our B2B platform. So the Chameleon platform and Ascot Games, and I'll show you guys some demos of what our technology looks like. So our Chameleon platform is our full suite iGaming solution, right? So we're able to service our clients everything they need. It's a customizable sports book, a full backend, a data, odds, risk management, age identity, location verification, and we're able to offer them esports, sports betting, as well as casino. One thing Scott and I have always preached is we want to give our clients 0 exit points. So once we sign on a client, we don't want them to have to go to a different service provider to get casino games. We signed a deal again with your aggregator to get 6,000 casino games into our platform that we're able to share with other sports books. We want them to be able to use all traditional sports on our platform, all of esports. So again, 0 exit points, keep them on our platform and be able to service them for everything they need on Chameleon. And how we make money on the Chameleon platform, we charge an upfront integration fee that gets them in, gets them set up, customizable sportsbook, look and feel exactly how they want. Then we do a monthly license fee. This is a fixed fee. We generally charge a 3-year contract. It's pretty sticky once we get a client on. We don't expect them really to leave. There is a lot of friction to leave. And then the cool thing about the B2B side is we actually grow with our customers. So as they grow, we grow. So we do a rev share with them. So early on, we get that kind of fixed fee, but as they grow, we get to share in that gross gaming revenue. So that's what's exciting about the B2B. There's a lot of blue sky there, and every client we get on board, we continue to compound that revenue. So I'll show you guys a demo. This is our demo site. This is the Chameleon gaming platform, very esports focused, of course. And what I'll do is I'll show one of our unique offerings, which is called Stream Bets.
I think it was a smoother play stuff with clearing them out.
So Stream Bets, you actually get to watch the game. And then we have live odds coming in every 10, 20, 30 seconds for different events that are happening through the game. So here you go. The game starts. You can see the streamer. Sorry. And what you'll notice is on the right side, we have bets coming in. These are live bets that you can bet on, and it's engaging. What's going to happen next? And anytime, with esports, different things happen within 30 seconds, just like sports, that you can bet on. And this is one of the most kind of unique offerings for esports. What a lot of people like to be able to actually watch the match while they're able to bet. And the bet ends in 13 seconds, as you can imagine. So there you go. So that's our esports Chameleon platform. And again, this can be completely customized for any new operator that we bring on board. And then this is our other aspect, our other arm of our business. This is our Ascot Games division. So this is the newest arm of our business, but this is actually one of our most exciting. So we're very excited about the Ascot Games division. We're building in-house casino games. And one thing we're trying to do here is we're not going after that older demographic that's doing those spinny cherry wheels or fruit wheels. We're trying to get this into the hands of a bit younger demographic, the millennial audience, right? So we're trying to make our games a little bit more fun, a little bit more interactive, give the user the feel that they get to actually have some control on the outcome of the game. So we currently have 2 games completed, live, up and running. We have a 3rd game in testing right now. And then we have about 10 to 20 concepts that we're working on as well. We hope to get a suite of over 10 games by the end of 2021. And again, we signed our first deal with the aggregator to get these games into over 100 different sports books. We offer these games on our own platforms, and we're looking to sign more deals, obviously, to get our games into thousands of sports books. And we take a rev share every time someone plays these games, which could be very lucrative for us if these games do well and players like them. So I'll show you some of our games as well. What I'll do is I'll go to Ascot Games. So you can see our games at Ascot Games as well. And I'll show you Crash Ice. So Crash Ice is a little bit more fun and interactive, as I mentioned. You're essentially a robber. You go into the bank, you make your bet, and then you start stealing money. There's a multiplier, so your money starts going up and up and up. And at any point during the game, you can cash out and take your winnings. Now, if you don't cash out in time, the cops show up, you get arrested, and you lose everything. So that's kind of the game concept, which allows players to actually have a bit of a more interactive experience while they play the game. So here's the demo game. So you make a 10 euro bet, and the game begins. Here's your multiplier. So this is how much you can make if you decide to cash out. But again, if you don't cash out in time, the cops are going to show up, you're going to lose that entire amount. You know, this is quite exciting for people. So you didn't cash out in time, the cops showed up, you lose that entire amount. And I'll move it forward a little bit, play a second game. You can see a 60 euro bet, getting pretty big here. And again, if you cash out in time, you get to keep all that money, that's yours. And this is completely built on a random number generator, a certified random number generator, which we build all our games on top of. So the game could crash, you know, in a second, in 10 seconds, in 30 seconds. It's really a completely random game. And there you can see you got to cash out, and you made your money. So those are kind of some of the demos. And so that's our B2B offerings. That's where we actually, you know, participate in those rev shares. We license these to other operators. And then back to B2C. So this is our direct-to-consumer platforms. These are the ones that, again, we market, that we run, that we brand. The flagship, of course, here for us is being McBookie. This is our UK sportsbook. We acquired these guys earlier on in the year. Amazing company, amazing brand, really focused on the Scottish market. We really want to dominate Scotland. We have two very strong operators there, Paul and Damien, who know that market, you know, inside and out. We have over 10,000 active members on the platform. We have over 135 million bet in the last 3 years. October, again, was a big month for us. I think we had over 7.5 million wagered on the platform in just that month alone, over $500,000 in revenue, which was great. We have sports betting, we have casino, we have virtual sports. We're continuing to add new features. One thing we're really excited about McBookie is, again, we think there's a lot of low-hanging fruit. Reason we acquired these guys is we thought there was tremendous amount of upside on the revenue side. These guys, in the last decade, have remarkably gotten to where they have organically. You know, very little money spent on marketing, so that we think there's a lot of room to grow. We're coming in with our team, with our resources, and we're doing a ton with these guys. You know, SEO, blogs, social campaigns, email campaigns. And then next year, which is going to be exciting, we're actually going to start spending some money on marketing, some digital ads, some programmatic ad buying, get new players in. And our platform's growing every month right now, which is great. Big news last month was awesome. Scotland actually, for the first time, I think this century, is playing in a major tournament. They got into the Euro Cup for next year. So that's going to be amazing for us. A lot of branding opportunities, a lot of opportunities to get new players in, you know, back in their home team in a major championship, in the European Championship. So we're excited about this platform. We had a goal that we wanted to take their 2019 revenue. We wanted to double that this year. We're on pace to do that, which is great. And then we want to more than double that again next year. Those are our goals with McBookie. We have a FansUnite social sportsbook. So no real money involved in this platform. We give our users a free virtual currency. They're able to make their bets on live odds coming in from Pinnacle. And then it's social. So they're able to see, you know, what they're betting on, track all their bets and their analytics, but they're also able to see what other people are betting on. They can follow them, they can copy their bets, they can use that to go bet on a real money sportsbook. So we have over 30,000 registered members on this platform. The great news is we have a lot of these in North America, which is, for us down the road, we're going to be able to open this up and monetize on these guys by through the affiliate channels and getting them on regulated sports books, while again we share in their kind of net profit moving forward on the affiliate basis. And then one really cool thing is Vamos. So Vamos is our newest brand. And one thing we're able to do with the Chameleon platform, as I mentioned, it's very flexible, it's very scalable. We're able to go into regions and launch our own brands very, quick. Do a quick rebrand and be able to launch a sportsbook in a different region that we want to. So Vamos is very focused on Latin America, really focused on Brazil. So it's an esports centered sportsbook, where we're adding a few sports that the Brazilians like basketball and soccer, and it's very focused again regionally. So this is the cool thing we can do with Chameleon. We want to go into a new market. We can do a new skin. We can launch something in 30 days in a regulated market, and then we can start growing and scaling those platforms on the B2C side. But it also serves as a showcase to show other operators what our platform can do, and then we're able to white label that platform out in those different markets. And then licensing. Licensing is big, obviously. We, as a public company, we operate in regulated markets. We welcome licensing, and we've spent a considerable amount of time over the better part of the last decade, going through licensing and going through tier 1 jurisdictions. So as mentioned on Monday, we have got approved for our Malta licenses, which was amazing for us. This is a tier 1 jurisdiction. It was a rigorous process for our tech team to get all our technology audited by them. And we received, again, both the B2C license as well as the B2B license for everything we need for casino, for fixed odds betting, for pool style betting, as well as skill games. So super excited about our Malta licenses. Again, it opens up Europe for us. It opens up more payment options in Europe. It just opens up a massive demographic for us in regulated markets. We also have a partnership with a company in Curacao that allows our technology to be distributed through a Curacao license, which again focuses a lot on the Latin American market. The UK market is the gold standard for gaming. The UK GC is one of the kind of most stringent licenses to get. McBookie currently right now operates on a sub license out there. Once we acquired them, we started the process to get our own UK license. So we've done that. We've started that process. We're hoping, Q1, Q2, we're able to get our own UK license. That gives us so much more flexibility in the UK. And then again, it gives us multiple tier 1 licenses in Malta and the UK. And then the US, state by state, as I mentioned, our biggest entry point was through Gameco. That got our technology into the US, and now it's about launching a deal in the US, which we're actively working on. US market's going to be one of obviously the next big giants, already starting to be that. And our partnership with Gameco probably fast forwarded us 1 or 2 years and millions of dollars. So that was a huge partnership for us that we announced in early September. And then the last one we just added here was Canada. So some big news came out here in Canada a couple weeks ago. Bill C-2118 getting moved forward again. And for those of you guys that don't know, that's legislation to hopefully allow single event betting here in Canada. And that's big because right now in Canada, if you want to make a bet on a single event, you can't do that. You have to bet on 2 games, a parlay, which makes your odds decrease significantly. So what's happening is a lot of Canadians, really everyone I know, goes to offshore sportsbooks so they can actually bet on single events. So hopefully if Bill C-218 goes through, single event betting will actually be legalized here in Canada. Now that's just the first step in getting Canadians to actually stay in Canada and make their bets here in Canada, because there's estimates that near 10 billion is going offshore. So that's the step 1. The next step, which we're hoping will happen, which again, we don't know, is that Canadians, especially Ontario, who's been talking about it, will actually allow outside operators to come in and take bets. Right now, you have to go through the provincial lottery course. It's not a great user experience. The odds aren't great. And that's why we're seeing, again, a lot of people leave Canada. So if they allow outside operators in, we hope that we can be at the forefront of that. Not only did we just join the Canadian Gaming Association, we've only operated in regulated markets. We've never taken a bet here from Canada, and we're a Canadian technology company. So we hope we're at the forefront of that. If and when Canada opens up, then we're able to get licensed, especially being licensed in multiple tier 1 jurisdictions. We hope that gives us a leg up to be able to service the Canadian market and really be at the forefront of that. And then our team. So we do have an amazing team, from a technical team, from a management team. But one of the really cool things I want to chat about is our board. So you don't typically see these type of, what we call industry heavyweights on junior companies when these guys joined. Obviously, we're growing right now, which is amazing. But Scott and myself are on the board. But we brought on 3 industry guys. So Harish joined our board when we went public back in March. Harish is the former president of Paddy Powered Betfair Asia Pacific, which is Flutter Entertainment Group now, which is the largest sports betting company in the entire world. He specializes in everything gaming, from financing to M&A to government relationships to launching new brands around the world. He's brought a tremendous amount of value for us. We talk to him obviously, every week, looking at different opportunities, looking at different markets, looking at potential M&A transactions, and then we brought on Chris Grove, who's a partner at Eilers & Krejcik Gaming, and he is one of the U.S.'s most nationally recognized gambling experts. He has started and sold multiple companies in the U.S. on the affiliate side, and he works with some of the biggest gaming guys in the U.S. So you'll see him, and you'll see him talking on various publications around the U.S. And again, probably one of the most influential guys in the U.S. regulatory space. So extremely grateful to have someone like that on our board, especially as we try to enter the U.S. market. And then James Keane was one of the founding members of Paradise Poker, which during the poker boom was, I think, the third largest poker site. That site got sold to SportingBet. He became a managing director at SportingBet, working with kind of emerging markets. And right now he's the CEO of a social casino games developer. So again, he opens up so many doors for us globally, as well as in the casino space. Our board is very active. We talk to these guys all the time, looking at different opportunities. So again, for a junior company to get industry heavyweights like this on our board, shows a lot to us, validates a lot of what we're doing, and I hope gives kind of the market confidence that guys like this will join our board. We're doing something pretty special. And so I'll wrap it up, and again, I'll just kind of talk about a few things we talked about earlier. We know the industry, right? The opportunity is there. It's growing every single month. It's growing every single year. And one thing that's shown is it's proven to be pandemic proof. The really cool thing about us is, yes, sports stopped, in March, April, May, but our casino grew at big numbers. We hit records on our casino. Esports continued to grow. It's a global game, right? You have games on at every really minute of the day and around the world. So we think it's really proven to be pandemic proof, and we want to be a full iGaming platform: sports betting, casino, esports, virtual sports, really everything. And again, we believe we're at an inflection point. So in August, when we did our last raise, we didn't go out there and raise money to try to build a new platform and see if it works out there next year. We've done that. We've spent millions of dollars and years building out our platform, building out our technology, validating the technology. And now for us, it's really growth and scale. All aspects of our business right now, from B2C, from B2B, and our games division, are now revenue producing. We have multiple revenue streams, which is exciting. We're continuing to get more licenses. We're continuing to get more partnerships. And now we want to grow those B2C brands. We want to get more clients on those B2B. So 2021 is a huge year for us, really, on growth, as we really put a lot of effort into R&D over the course of the last 5 to 6 years. And then, as I mentioned, the additional gaming license, UK is really the next one for us, as we just got Malta. UK is the gold standard, which we're working on to get for McBookie. US expansion, we've signed our deal with Gameco. Now it's about executing on that and actually selling our software in the US with those guys. We want to sign additional B2B partners. As I mentioned, every B2B partner we get on, we get to participate in that rev share. We get to compound that revenue as they grow. So the more we can sign on, obviously the bigger we're going to become. We're going to launch more regional sites. So the recent one is Vamos. Vamos marketing starts next month, which is exciting for us. Hopefully that grows and scales pretty quick, and then we're going to look at other regions that we think we can kind of go in, niche markets, and really dominate in those markets, launching esports sportsbooks or traditional sportsbooks. And again, all of our aspects of our business now, from B2C, B2B, and games, are revenue generating. So we'd like to push and grow all those, pour some money, pour some fuel in the fire on those, and really get those to the next level. Our games division, again, probably our newest division, but one of our most exciting, if not our most exciting. We want to get that full suite. We have a whole lot in the pipeline. We're heads down developing these concepts. Being really cool, we've actually had shareholders reach out to us, giving us some of their concept and their ideas, which we talked about, which is really cool. So hopefully we're actually able to build some concepts out that some of our shareholders have shared with us. So we want to get to about 10 games next year. We have 2 done right now, third one in final testing, and the fourth one's already begun development. And then we're always looking at deal flow, which is great. I think just having guys like Chris and Harish on our team, having Scott and myself who have been in the industry for years, we get a lot of deal flow. So it was really cool. We get to look at a lot of gaming companies around the world, looking again, finding companies that have a good user base, that have great technology, or they have a great revenue stream, and where we feel like we can come in and really take those guys to the next level. So we're always looking at potential deals, and we have a great kind of deal flow access through our team. And that sums it up. I'll get Jack back on here. Maybe we'll do some Q&A if there are any questions, and then we can go from there.
Okay, Darius, that was fantastic. Thank you for the update. Let's jump in. Oh, so we got a bunch of questions. I'm going to jump into those in a second, but I want to ask you if you can just kind of summarize Malta license. What's going to be kind of the bottom line, like in terms of the impact on revenues for fans, let's call it over the next 12 months, 18 months, if you can kind of give investors an idea of what that could mean, this license for Europe now?
It's big. It's huge for us, and this is almost a year in the making. We've been working on this for quite some time. So Malta opens up Europe for us, a massive demographic, right? Europe is one of the biggest gaming kind of regions in the world, obviously. So for us to be able to not only launch new regional brands in the US, kind of like that Vamos, or sorry, not in the US, in Europe, kind of like Vamos in Europe is big, and then for us to be able to actually white label our technology to Europe, again, massive. So we're pretty excited. We're going to get a full business development team out there, launching again our own regional brands, hopefully licensing our technology out. Everyone we bring on board continues to add to revenue, continues to compound on those fixed fees. And again, they're 3-year contracts typically. We don't expect those guys to leave once we get them on. It's pretty sticky, and it's pretty hard to get off and go to new providers. So we're pretty excited about Malta, and then obviously UK is next.
Okay, so how big is the European market for for the online, the betting, the gaming, the whole thing right now?
Yeah, billions. I think we put a number in our press release that we sourced. I can't remember the exact number, but as a region, one of the largest in the world, multi-billion. Online gaming is the biggest there right now, which is great for us, because that's really all we focus on. We're not bricks and mortar. We're completely online, and we're that full suite, right? So we want 0 exit points for our clients, casino, sports betting, esports.
Okay, so in terms of revenues, I mean, we're talking 50 million, 100 million. What could the FansUnite generate from the European licenses?
Yeah, we typically don't give too much guidance on those forward-looking numbers. We do have some guidance out there with some coverage that has been launched on us, which is great. But yeah, we are talking millions. That's our goal. If it's anything less, we're not doing our job. So that's the goal for us, and we're very focused on getting those numbers.
And what about, okay, so in terms of the Canada regulations, so that, and again, I'm going to ask you basically the same question, is what's going to be the impact on revenue for fans? I mean, that's really what the audience wants to know, dollars, bottom line,
Yeah. So
stock, they want to really know.
So there are estimates out there. Again, estimates about $14 billion is wagered here in Canada, and the majority of that is going offshore. So over $10 billion is going offshore. So step one is getting that 10 billion back into Canada, right? That's number one. And then can we go out there and get a market share of that? That's our big goal. As a technology provider, we want to be able to get as many kind of those sports bettors here in Canada betting on our platform. So what that means to the bottom line, we don't know yet. We need that regulation obviously to pass first to allow single event sports betting, and then we need provinces like Ontario to actually allow outside operators to come in. And we think if that happens with Ontario, the rest of the provinces are going to follow. And again, we hope we're at the forefront of that, just being a Canadian company. Okay.
Okay, so let's go into some audience questions here. We've got a bunch of questions. I hope we're going to have time. We're running a little behind, so I hope we can cover some of them. Andreas is asking, Darius, you can see the questions on the screen, right?
I can see that, yeah.
So he's asking, any updates on McBookie for November? Did you match the October revenues? You had some blowout numbers.
Yeah, October was a kind of a world record for us on McBookie in their 10-year history. So again, this is not really public information out there, so we won't put full numbers out there. But we didn't match October, I'll tell you that. But it was a nicely profitable month for us in November. So that's our goal, and we actually hit record numbers for new players on the platform. So that's what we're excited about. And again, we're going to continue growing that. We're profitable every month right now at McBookie, which is exciting for us.
Okay. We got a bunch of questions asking about how do you compare with various companies. So we'll start with people asking about how do you compare with DraftKings?
Yeah, I mean, well, obviously they're a much bigger company than ours, but I think what's exciting about us is we're a much lower entry point, and we're excited about our technology. So you look at a company like DraftKings, very focused on daily fantasy. That was really their bread and butter. Them and FanDuel. When the U.S. opened up, they knew they had the opportunity to go into sports betting. So they're very, again, U.S. focused right now, which is huge for them. And FanDuel, they take almost all the market share in the U.S. On the sports betting side. One interesting thing about DraftKings was they didn't own their own technology on the sports betting side, so they were white labeling that technology out as part of their go public strategy with that SPAC, Diamond Eagle. They actually acquired SB Tech. They acquired SB Tech for estimates of about $700 million US because they wanted to bring technology in-house. Now that's why we're excited, because Scott and I have always preached technology should be in-house. That's why we spent so many years building out our technology and spending millions of dollars on our technology, because that gives you flexibility, that gives you the ability to scale, to be able to customize, and to be able to hopefully look to become like a company like SB Tech. So yes, DraftKings is obviously a lot bigger. We're really focused on the technology side. They're very B2C, but we're really going to focus on B2B. But they're a much bigger company, but I think it shows you how big the gaming industry is and how there's opportunity, hopefully, for companies like ours to get there one day.
Yeah, and I think one key thing is, again, I think we talked about it on previous live streams, is that what everybody's saying now, as there's the sports betting thing, really takes off in the U.S., everywhere else, is that their margins are going to be very tight, and they're going to need to make their money on the casino games, the iGaming. Yeah. And I think that's kind of where the opportunity is for FansUnite, for some of your the Ascot games.
Yeah. Yeah, 100%. And one big thing about those companies, obviously nothing against them, but they've spent a tremendous amount marketing and getting users in. That their cost of acquisition is extremely high.
This would help them monetize.
Yeah, exactly. And for them to bring in a customer in, we heard estimates of $500, $600, $700 to get a single player in, which is enormous. That's not you can't scale like that. Right. So, but they went out and they got a huge land grab and they got a huge market share. So it's been amazing to see what they've been able to do. But like you said, the goal on a lot of the sportsbooks is to get players in the casino. That's big. So, for us, again, if we're that full iGaming suite, can we get players on the sportsbook? Can we move them to casino? Can we get them betting on sports, esports? Can we get them playing our own casino games? It's a huge, huge opportunity for us.
Okay. A couple of people asked about Score. How are you? How do you compare with Score? I guess variations on that question.
Yeah, a competition. No, I think the better these companies do, it's great for the entire industry, right? So the Score, again, is going to be very focused right now, I think, on the U.S. market, which is great. Their app is very, very solid, and they've been around for years, right? So they have a good platform. Again, we're really focused on technology, where we want to be that back-end solution, which makes us different, than the Score. But I wouldn't say competitors really. We're obviously in the same industry. They're another Canadian company. We hope they do very well. I think it's going to be great for the entire industry. They're focused on B2C. They're focused on their sportsbook and their app and their media. We're focused on technology.
Okay. Which countries are next? I think, did you cover that? Which countries are next in line for gaming licenses?
Yeah, I would say UK first and foremost. That's really the gold standard. That's one we're actively working to get. That's next for us to get McBookie on their own license. And then we're hoping Canada opens up, really. We don't know yet. Being part of the Canadian Gaming Association now, hopefully gives us a bit of a voice, or at least gives us some kind of in to see where a Canada regulation is going. But UK first, and then hopefully Canada after that. And that really gives us an amazing structure globally. As I mentioned on that licensing slide, from the Curacao to Malta, US partnerships, and then hopefully UK and Canada, that really allows us to operate globally.
Okay. Let's see. Interesting question here. Because you're both B2C and B2B, are your clients also going to be your competitors?
Yeah, that's a good question. Potentially. With Vamos, again, that's like one that we're launching in Brazil. We're going to market. We're going to hopefully generate some good B2C revenue. but we use those as showcases to hopefully get other B2B clients. Now, we're not going to be, a FanDuel or DraftKings or some of these other sportsbooks pouring millions of dollars into marketing our B2C. We're not looking for those high kind of cost of acquisitions to get customers. We're really going to, again, focus on business development and getting our B2B. So yes, although we are going to launch regional sportsbooks because we think there's an opportunity there to go after small niche markets, we're never going to spend millions of dollars really growing those platforms like other kind of competitors. We want to be the technology provider behind the scenes. So we will continue to launch regional sportsbooks, but really our focus is going to be, and the blue sky is B2B.
Okay. Gilbert is asking, how many shares fully diluted for fans right now? And what's the insider ownership right now?
Yeah, so we have about 155 million shares. On a non-diluted basis. We do have some reserved for issuance, some warrants, some options that are, slowly being exercised, which is good. The cool thing about what we've done at Fans is we do have a good kind of lockup structure, and it's being voluntary. So founders, myself, Scott, our management team, other founders, not only did we go on the mandated escrows, over the course of 3 years, we decided to actually lock up our stock voluntarily. So for the first year, none of us have any stock coming out. For us, this is a long-term vision, a long-term play, and we decided to do that to show the market confidence. So that's one thing we did, which I hope resonates with some of our investors, because this is a long-term vision for us. We have hopefully a lot of room to grow. We think we're just scratching the surface here.
Okay. So are you going to do custom avatars for player odds?
Custom avatars. Not sure I fully understand that question, but we are pretty flexible for sure with what we can do with our technology.
Okay, I don't know what it means. Okay, let's see here. What other questions do we have? We got. A couple. Do you have any? You don't have any institutional investors yet, do you? There's not a lot of.
Not a lot, but we have some institutional investors that have come in now, especially going on to the OTC QB. That was one of the big reasons why we wanted to do that. So it's growing. And that'll definitely be a focus of ours moving forward.
Okay. Okay. Let's see. Can you integrate these in-game betting features with traditional sports? And do you have plans to uplist to NASDAQ or NYSE?
Yes. Yeah. So we have the in-game kind of stream betting on esports, but also on traditional sports. So we plug into Pinnacle. Essentially, we can get all their odds, in-play odds, to the second for all traditional sports. And for us, it's just a feature switch. So if we go to a customer and they want esports and basketball and football, that's all they want. Those are the ones we can turn on. We can turn on everything for them, from darts to curling to whatever they actually want. And we do have in-play on those, because we do have some great service providers on the data and the odds, and of course on the risk management side, which is key. To the second part of that question on the NASDAQ or NYSE, yes, we look at all options. That's something we chat about internally all the time. We want to make sure we do what's best for shareholders. So we are looking at all different options. I wouldn't put a timeline on any of those or a guarantee that we're going to do any of those, but it's something we're actively looking at and talking to our management team and our board.
Okay, Darius, I think we're out of time for today. We're gonna have to catch up with you probably in about a week or so. Maybe we'll have you and Scott together. We're gonna have the team going. My last question before we wrap up is what else is in the news pipeline? Like, what else do you have that investors can keep an eye on that as we close out December here in the year?
Yeah, so I think I kind of touched on it throughout the presentation. So for us, our major focuses are getting more B2B clients, so getting operators on board, using our community and technology, definitely a focus. Continuing to grow our own brands, so McBookie and Vamos as at the forefront of those. Continuing our licensing strategy in the UK. Those are really the major focuses for us, as well as launching new games.
Okay, one last question, Darius. In your, which is, we've asked you this before, but we like to ask always. In your opinion, top 3 reasons why investors should consider FansUnite today?
Top 3, yes. Good question. I think for us, it's 3 things again. So team, technology, and validation. So we've built a world-class team. We've got industry heavyweights joining us. Technical team is amazing. The technology they've built is amazing. So that's huge for us from the team and the technology standpoint. And then again, validation. We're not an early stage company that's looking to develop technology and hope it works. We've done that. We've validated it. We have multiple customers on our platform, multiple customers paying. Our revenues are growing right now. So again, it's about growth and scale for us. I think we're at an entry point which is solid for a lot of investors, because for us, I think there's a lot of room to grow with what we're trying to accomplish here in all aspects of our business.
Okay, fantastic. Darius, we'll catch up with you hopefully in about a week.
Sounds good. Thanks for having me, Jack.
Thank you, Darius, again. Okay, that was Darius Agdami from FansUnite. Let's get ready to meet our next presenter, our next super stock presenter, another high flyer, high volume stock on the CSE. We only bring you the best over here at Wall Street Reporter. Let's just stand by. Let me get this ready over here. Okay, we got power. Okay, let's get ready for Steve. Steve, you're here.
Yeah, hey, good morning.
Good morning, Steve. I'm gonna get everything set up for you. Do you have the slides open there on your desktop for the share?
I do. I just need to go to share screen and we'll be ready to go.
Okay, perfect.
Do you want me to do that now?
Yeah. Let's get it set up for now. Because our audience, they want to know what's next for the stock. I mean, the stock is up, what is it, 700% since your debut a few months ago. But Steve, they're looking for 100 baggers now. They want to see like what's going to make Empower a $2-3 stock.
Okay, so hang on here. Let's go
Okay.
there. Okay, there we go. Share has just shown up.
Okay, here we go.
So let me.
Okay, so I need the actual. Okay, so I'm getting the full screen. But if you could do this, I guess.
Yeah, I'm gonna flip over the slides right now.
Okay. Okay. All right. It looks like we are there. Let's get this on the screen. Okay, and if you can do the view where just the main view, just I guess the main view, the single slide, I think you call it.
Yeah, well, I've got this on a PDF, not on.
Okay. So can you show it as single? I think maybe single page PDF.
Yeah.
Or whatever you call it. So I look, because I'm seeing the stuff on the side of it. So
yeah, understood.
Okay. Okay, stand by, everybody. We're gonna have everything here perfect for you.
Hang on one second. Let me get this view opened up.
Okay, the screen is black now.
Yeah. There we go.
Okay, now it's perfect. Okay, Steve, it was worth waiting for this.
Okay.
Fantastic. Yeah, let me do a quick intro, and then I will disappear. So and I'll come back for the Q&A. Well, we got a lot of people in the room here. I think we got about 1,000 between YouTube and everywhere else we're on. We're on Facebook, Periscope. Okay, welcome everybody to Wall Street Reporter's next Superstock live stream for today, December 9th, 2020. We have back with us once again one of the hottest stocks on the market today, US, Canada, worldwide. Empower Clinics, CBDT is the symbol in Canada, EPWCF over the counter. Number one volume stock on the CSE today. Stock is already up. Well, it's been up, it's been down, and we're up. I think we're up now 500% since the debut. And we're gonna find out today, if Empower is gonna be, potentially our next 100 bagger stock, because we've had many 10 baggers. Now we need a 100 bagger to kind of round things out. So with that said, Steve is going to start with his presentation. We'll show some slides, give you the updates and everything, and I'm going to come back in about 15 minutes. and we'll get to the audience Q&A. And again, I see we're already getting some good questions. So again, guys, watch the presentation, ask Steve your questions, and decide for yourself if Empower is going to be our first 100-bagger stock. So Steve, take it away.
Great, Jack. Thank you. Thank you to the audience for joining us today. It's always a pleasure of mine to communicate and share exactly where we are now. But I think more importantly is to talk about our vision, my vision of where we feel that this company is going. So we're Empower Clinics. We focus on body, mind, wellness. I'll go through the slides fairly quick today because I think that the Q&A portion is going to be so important. But I want to describe briefly our purpose. So we believe integrated healthcare is where our patients have access to the best of all worlds. So we provide wellness services through our clinics. We currently have 165,000 patients in our database in our US-based clinics. We are definitely a technology leader. We've been involved in telemedicine now for more than 2 or 3 years, and we use telemedicine every single day in our clinic network. And we also recently closed an acquisition that we're really excited about, and that is a medical diagnostics lab called Kai Medical Laboratory, and I'll talk a good bit more about that. Our vision for the future is, and I'll just read this statement, a world where all people have access to an integrated healthcare experience, dealing with both prevention and problems, combining body and mind wellness, treating patients with both and conventional medicine, and starting to figure out how to bring those two together in a much more seamless delivery of healthcare. So high level, we're definitely positioned to be a leader in the integrated healthcare space. We've got a very experienced team, and we're continuing to add to that team, and particularly through accretive acquisitions that we'll touch on. During the pandemic, we've absolutely become sort of an innovative COVID-19 provider. A lot of that is definitely accelerated because of the laboratory acquisition that we completed. Telemedicine and just technology overall is a big part of what we do. We have HIPAA compliant healthcare systems. We have text message platforms, a call center. We have email campaign platforms so that we are interacting with our patients however they want to be communicated with. I do want to touch on about operating in the US. We are a Canadian public company listed on the CSE, but a lot of our main operating assets right now are in the United States. And being present in the US and having traction with the regulatory framework as a healthcare provider is not an easy task. You need to be operating in the US. You have to understand the US markets, and of course we do. And what that really means to me is it's tough for competitors to come into the US market as new entrants. We're already there, and it's a massive economy, as everybody knows. And finally, we're engaged in a very aggressive roll-up of clinics. We are going to continue to be accretive on acquisitions. You're going to see more announcements coming here in December, more announcements going into the 1Q and into 2021. So our business strategy is to create an integrated network of physicians and practitioners who serve patient needs in clinics, through telemedicine, and with decentralized mobile delivery. We have kind of two sides that we talk about on our strategy. First is health and wellness. So we have our operating clinics in the US. We are offered a simplified model for preventative and diagnostic and treatment services, always focused on the patient. We currently operate in the state or markets of Arizona, Oregon State, Washington State, primarily serving Washington State through our telemedicine platform. We have also our diagnostics and kind of research or technology side. So we acquired Kai Laboratory in October, I believe October 5th or 6th was the closing date. And we are really leveraging not only the really expansive testing capability that we have in the lab. But one of the things that intrigued me most about Kai Medical Laboratory was actually their R&D capability, or you could describe it as product development capability. They are doing some incredible work right now. In fact, last week and this week, they're running clinical trials and validations on no less than 4 new novel COVID-19 testing protocols. We've had some previous announcements about that. And boy, we're so excited about where that is going, because the demand for testing protocols is not leaving our society anytime soon. In fact, we now understand it's going to be lasting extensively longer than anybody even thought. Some background. We acquired the Sun Valley Health Group back in May of 2019, really adding a lot of patients and a lot of great performance historically to our company. We also previously announced that we have a Canadian clinic acquisition pending. We are in literally the final stages of due diligence and documentation. When we announced it, that clinic transaction would include 6 clinics. It's since been upsized to now 7 clinics in Canada. These initial clinics are in the Ontario region or Greater Toronto area of Canada, very large market, and we're incredibly excited about not only getting much more access to patients and opening up in Canada, but we're really thrilled with the 2 physicians who will really form part of my Canadian leadership team going forward. And these transactions are really just part of this ongoing acquisitive nature of the business, really leveraging the currency of the public company to bring much more shareholder value going forward. Kai Laboratory, this is the acquisition that I talked about. Kai is based in the medical district of Dallas, Texas, surrounded by some of the biggest healthcare institutions in the country. And it really has really elevated us, I'm going to say, to be a science and research leader, probably in ways that we even didn't expect, because we're so pleased with the acquisition once we got it on board and integrated. So the lab offers a wide array of testing. So think of hematology, toxicology, hormone testing, immunology, and we do that for hospitals and medical clinics and pharmacies. It is important to understand right now that also COVID-19 testing processing and capacity is a very big part of the business model at the moment. And for shareholders, I can tell you that it's been very accretive on our free cash flow. We've had some tremendous transactions come in based on large industries, and we're really chasing after providing solutions on a national and potentially international scale. So we really are looking to serve these big markets. We've previously announced some partnerships with other technology providers that really bring together kind of the whole supply chain of serving the demand of testing. So we hear a lot of news about vaccines coming to market, and I think it's important for me to describe to everybody that vaccines coming to market are not a direct correlation to testing demand going down. It's absolutely not linked. We are not going to see any form of herd immunity come to the market probably ever, knowing that statistically you need more than 60% of the entire population of the world to be vaccinated in order to even reach herd immunity. In Canada, we can barely get to 20% of the population getting a flu shot each year. So that concept of herd immunity is likely never to exist. So the protocols of testing requirements to open up travel, open up tourism, maybe get back to work, help hospitals, help care homes, is something that all countries and governments around the world are now having to deal with. So I think that us strategically getting a high complexity CLIA certified lab on our books has been very accretive and I think very strategic for us. We have really good talent on our team. I've got a great board. We've currently got 55 people on the team, a whole mix of physicians to med techs to scientists to business development people, call center reps, customer service people. As we add these additional acquisitions, we can anticipate that our team population or the size of our company from a human resources standpoint is going to grow dramatically in 2021 and beyond. Our leadership team, this is our board, myself, Andreas Bunksha is an attorney in Arizona. Dustin Klein and his wife were the principals of Sun Valley Health, and Dustin joined our board post-acquisition. We work very closely together as a board, very strategically, and honestly, we talk pretty much every day. We have our CFO, Kyle Appleby, out of Toronto. Andrea Klein is the head of operations, and Yoshi Tyler was the principal of Kai Medical. She stayed on with us and has become a really important leader in the science and research and development side of our business. Looking back, our revenues, have been growing quite substantially on a year-over-year and a quarter-over-quarter basis. We had a very strong growth in Q4 just passed at over 200%. Going into Q1 up 400%, and we carried that forward into Q2. Q3 financials just came out, and again we were up in excess of 50% year over year in the year-to-date results in our financials. Patient visits, a big indicator or KPI for me. We've had just significantly large year-over-year growth in patient visits, and for us, patient visits, no matter how they come together, translate directly or correlate directly into revenues. As we look at peers, it's something that we kind of monitor very closely. We look at companies like Well Health in Canada or Amwell or Teladoc in the US, and we're seeing those companies getting really significant multiples on their trailing 12-month revenues. The chart on the left for me is not updated. We've obviously had some tremendous growth in our valuation over the last couple of weeks, particularly. So I'd say that our market cap now is somewhere in the neighborhood of $60 million, giving us somewhere in the neighborhood of, say, 20x. So we're starting to get pulled and compared, I think, more appropriately and more accordingly to these new comps. Obviously, as I lay on these additional acquisitions, it brings more revenue, and we would expect that we would start to see our valuations and share price continue to rise based on the new revenues that we're bringing to our business model, and really just trying to demonstrate that great shareholder value. Share capital structure, we're 227 million shares outstanding. Fully diluted. Again, market cap has gone up from when this deck was put together a few weeks back. Again, market cap somewhere, I'd say, in the $60 million range right now, and thankfully continuing to rise. We are seeing something really important happening to us. One of the benefits of creating this additional shareholder value is that we have warrants outstanding that are converting now, and so we're fortunate to start to see our existing shareholders coming back in and converting their warrants, and this is bringing free capital to the company. It's giving us the ability to really make the move strategically that we need to make. It's giving me the ability to make the investments in our divisions, investments in future growth, and I'll have more updates on how the warrant conversion program is going, but I can tell you that as of today, we're really seeing nice results in that. Kind of why we'll win. We'll finish this up right now and get on to the questions. But we have a great leadership team with really great experience in healthcare and technology, and of course public markets, which is very much my background. We're definitely an operator in the United States right now. This massive, large market. We understand how healthcare works in the United States. We are playing a significant role in testing and developing novel new testing protocols including our new saliva tests, which start to come to market next week. And we'll have more updates on an additional one that we're validating right now that will be finalizing its FDA approvals based on the clinical validations that Kai Medical are doing. We've got high demand for our platforms and our technology. We believe that technology is going to play such an important role for our company. We are investigating and looking into what additional technology layers that we need to bring to bear, including technologies such as artificial intelligence, to really improve the way that our physicians and our med techs and our staff can provide care to our patients. Finally, I think we're still really undervalued. That the healthcare market is so significantly large around the world in the markets that we serve. We're certainly grateful for the shareholder support that we've seen over the last little while, but I think we're just starting. We're nowhere near where our potential is going to go. So thank you with that, Jack. I'll have you kind of get us back on the screen, and I'll be happy to interact with the audience.
Okay. Let's see. Waiting for questions. We've got a lot of comments. So waiting for questions. We have a lot of positive comments. So anybody with questions, pop up your questions. Steve, meanwhile, I'm going to ask you in terms of the warrants outstanding. Like, what are the exercise prices of those warrants? Like, how much are you expecting to bring in, and the proceeds, most importantly?
Yeah, so we really have three thresholds: 10 cents, 12 cents, and 16 cents. All of that information is publicly available in our financials. So for those warrant holders at those particular price points, I would say that those shareholders are very happy right now. And the total, if I looked at the entirety of all warrants, there would be $12 million of value there that we could draw upon. It's unreasonable to expect that all warrants would convert, but we are seeing a very rapid conversion happening right now, and that's all natural funding for the company. It means I'm not going out to market right now to do another round of financing, because we have these natural conversions coming in, and it's great for existing shareholders because it's non-dilutive. It's already in the cap table. So I'm really pleased with what's happening, and I'll give you some more updates, Jack, probably our next time that we're on again. Really just how successful the warrant conversion program is going.
Okay, so that would bring in roughly, let's just call it $10 million.
Well, I don't know the answer to that. We have seen over the last, even this week, we've seen tremendous inflow of conversions. And so what I think I'll be able to do for the audience, it probably won't be until next week, but I will give an update next week, kind of just how it's going. But I can tell you that we're very pleased. We've already received commitments for millions of dollars in warrant conversions. So it's not hundreds of thousands; it's literally millions already.
Okay, so I'm just let's assume it's $10 million that comes in, roughly, Canadian dollars, right? So
correct.
What are you planning to? How are you planning to deploy that growth capital?
Well, there's a few easy ones to answer for you. First, we've got our Canadian clinic acquisition that's pending. Obviously, that's a very important use of proceeds. We're going to invest in a very aggressive kind of dynamic rollout across Canada of our integrated healthcare clinics and services. We're going to use the proceeds to continue to invest in research and development through Kai Medical Laboratory and access some of these incredible national programs and maybe even international programs. We are in active discussions with airlines, tourism, hospitality, cruise lines, and trying to solve these. You see the terminology of bubbles, whether it's a travel bubble or we've seen the NC2A, college bubble that just took place in Las Vegas and South Florida. there are many more of those situations that have to be brought to market because consumers need to get back to traveling. Consumers need to get back and participate in events. But consumers don't want to have 14-day quarantines imposed upon them when they return. And so the only way that that can be solved is in combination of having a really detailed strategic plan on what that travel bubble might look like, what that new work bubble might look like. You need testing protocols of all forms. You need PCR testing, you need rapid antigen testing, you need rapid antibody testing at various touch points through this sort of supply chain. And finally, you need contact tracing technology to pull it all together. And so that's why we've recently announced the types of partnerships that we have with airline consulting firm called Simply Flying that have consulted to more than 100 airlines around the world. Loop Insights, who have such a tremendous live contact tracing technology. And we play such an incredible role at the clinic layer, at the medical layer, and obviously the testing layer through our labs and the network of labs that we're developing.
Okay. Michael is asking, what price point are your saliva tests selling for?
Yeah, so the saliva tests, the price point hasn't been announced yet, but I can tell you it's going to be quite consistent with our current PCR tests. So the saliva tests are ultimately a PCR test anyhow. The method of collection is slightly different, so you no longer need that nasal swab or throat swab to collect the specimen, but the testing part of it is still a PCR test that's done in our lab. So we currently, in our retail environments, are selling our PCR tests for $125 US. Those are available on our websites and landing pages as public information. We are selling our rapid antibody tests for $65, and we have some programs where if a business or a customer or patient want or need to purchase both, then we offer a combination package that's a little bit less expensive.
Mr. Riley asking, expected revenue for next year?
Yeah, so it's hard for me to give guidance on that topic right now. We are on such a rapid expansion and growth. As an example, we recently were awarded another film and television testing contract that is expected to be 10,000 specimens over the next 4 months. It's starting this week, actually. That's something that, that's in excess of, $1 to $1 million US as, new high margin revenue coming in through Kai Laboratory, which is a wholly owned subsidiary of the public company. So all of that, revenue rolls up. So, I can give some more guidance on that as I get into 2021, but, right now, we're expecting, fairly significant growth rates to continue. Remember, we've got our acquisition programs going on. Those will not stop. I'm not going to slow down on identifying and closing accretive health-related acquisitions to expand our footprint, expand our reach, expand our access to patients. And ultimately, access to patients directly correlates to revenue growth in the future.
Okay. Ryan is asking, what are your margins? And looking on an FDA website, where can you find your tests?
Okay, so hey, the margins, thankfully are very, strong in the testing world. I'm assuming that question relates to margins in testing. We certainly have cost of goods. We have labor costs for testing. We have shipping costs to incur, but it's still a very strong margin or profit margin for us. With respect to the FDA test, so I want the audience to understand, I probably need to give more information in a later announcement or talk about it further at another point in time. But when you go to the FDA, so Kai Medical is not the test kit manufacturer, so you won't see Kai Medical listed on FDA websites for a test. laboratories are not governed by the FDA. We're governed by CLIA, which is the Clinical Laboratory Improvements Amendment. And so labs really kind of are governed on their own. So so our first saliva test, as an example, the saliva kit manufacturer is a company called DNA Genotech. It's actually a Canadian company, subsidiary of a large US healthcare company. Our lab has to validate and produce its processing approach, and it's called completing an assay. That assay is unique to Kai Medical Laboratory, and without validating that assay, you cannot process the tests. But you won't see Kai Medical necessarily on an FDA website. However, we are involved in assisting companies like API Pharma, who is our partner for our rapid antibody tests and our rapid antigen tests. So they have their FDA EUA test approvals and submissions. They are CE approved, and we assisted them with the Health Canada submission, and I'm personally the Canadian registered correspondent for that submission, and we have our Health Canada application tracking number already received. So although our name doesn't necessarily land on Health Canada or land on the FDA website, we are absolutely involved in bringing these test protocols to market. And in fact, as I said earlier, we are running last week and this week no less than 4 different clinical validations right now through Kai Medical Laboratory in Dallas, Texas.
Interesting question about the testing. Chris is asking, can you this test tell the difference between other previous strains of COVID and or flu? There are numerous variations. Yeah,
so very specifically, not necessarily previous strains of COVID. I think COVID-19 is somewhat unique to itself. We have absolutely brought to market. In fact, we filed trademarks for what we call the Kai ABC PCR. So ABC stands for influenza A, influenza B, and COVID in the same lab processing. So from a single specimen, now going forward, we can identify, influenza A, influenza B, or COVID, because as in the Northern Hemisphere right now, we're in seasonal flu time of the year, and some of the early symptoms of the common cold or the common flu may present in a similar fashion that COVID might. So it's going to become very important for society to understand, do I have the flu or am I positive for the COVID virus? And that's a very important distinction. So as we've done our new validations, we have validated our new test procedures, our new assays, to be able to process influenza A, influenza B, and COVID from the same specimen. I can tell you that our new big clients, as an example, the film and television project that I talked about earlier, they absolutely want the Kai ABC version of the test process, not just the COVID version.
Okay. We got a couple of people asking a variation on this question, I guess, which comes down to, I guess the question is, why is the stock not going up every single day after they bought it? Like, why? Nobody was asking questions when the stock was going up or doubling.
Yeah, obviously in my position, I can't control the stock market. I can't, it's not, we just don't have the ability to do that. What we can do is we can continue to take steps in our long-term vision, in our business plan. I can communicate regularly and often, by participating in your show, Jack, just like this. This is a method for me as chairman and CEO to talk to shareholders, to talk to followers and potential new shareholders and investors about our company and our business plan. It's also incumbent upon us and incumbent upon me to execute on our plan. One of the things that I pride myself on is execution. Our team execute every single day. We treat patients every single day with incredible care and support. But from a business standpoint, when we look at shareholder value, we are executing on strategy, on big initiatives. Over time, it's fair to expect that we will see more shareholder value. We've seen, obviously, some big big jumps in our valuation, particularly over the last couple of weeks. We are grateful to the market and grateful to our shareholders for that. Stock prices just don't go up every single day, always. Some people sell, some people hold. I can't obviously predict what that is. The one thing that we have been working on that's led to some of this success is I've worked very, very hard on creating liquidity and creating sustained liquidity. That's one of the first early indicators of potential, future rises in valuation. So one of the things that, again, that I look for just in the markets is this consistent, continued liquidity. And thankfully, we're getting a lot of liquidity right now.
Okay. Let's see here. We have a question. Anil is asking, are you planning to acquire a testing lab like Kai Medical in Canada? A couple of people have asked.
Yeah, so it's a good question. We're absolutely looking at that. I don't have any specific updates that I can offer at this point in time. The first step for us is to get our health clinic, our medical clinic presence completed in Canada. And again, thankfully, we're at the final stages of that. From there, we're going to absolutely try to determine, should we acquire a lab like Kai Medical for the Canadian market and to meet that demand. We're absolutely bringing new novel tests to Health Canada for submission. We believe these types of tests should be approved and should be made available for Canadians. So it could be logical for us to make that step as well and acquire our lab, our own lab in Canada. But at a minimum, we will certainly be partnering with the lab community in Canada. But more to come on that topic, but we're absolutely looking at it, thinking about it.
Okay, so Sini is asking, can you, I guess, talk a little bit more about your, developing the telemedicine, telehealth in North America?
Yeah, so we already are a telehealth or telemedicine provider. We use telemedicine literally every single day with our patients. And it's obviously a much more, it's a needed and effective service to provide patients. The healthcare or the delivery of healthcare, that paradigm, if coronavirus has taught us anything, is that the healthcare system has to evolve. We have to allow, the regulatory framework needs to allow practitioners better access to patients, because not all patients can come into a clinic. Not all patients can drop their work schedule, their family schedule to go and sit in a clinic, wait for the appointment and have it done. We're proving, because of the pandemic, that phone consultations can be effective for many aspects of basic healthcare delivery. Video conference or telemedicine is incredibly effective for the delivery of mental health care, the delivery of primary health care, dealing with the basics of updating a prescription request. So to answer the question specifically, we're already very active in telemedicine. We are going to continue to invest in better, more progressive technology features to improve the way that physicians and patients interact, how physicians gain information about the health of their patients even before they come into their office. Think about being able to connect through the Internet of Things, so IoT. Think of health tracking that we have on a Garmin watch or an Apple watch or on our phone. If you're a diabetic patient and the physician can learn before you came in that you've actually been very active for the prior month or 2 months, because they can see your steps and how much activity you've been doing each day, it will help that physician. It will help that physician treat that patient and be more effective with their care.
We got somebody asking, I guess, to a different question. Do you think the demand for testing, do you think demand will exceed your capacity of 4,000 tests per day? If so, what are your plans to, I guess, boost capacity?
So we are absolutely working on this aspect already. With the new novel tests that we are validating right now, particularly our saliva PCR tests, keep in mind that the saliva PCR tests that we are bringing to market are at-home tests. These do not require a med tech to administer specimen collection. So these can be shipped to your home. These could be shipped to an office. They could be shipped to a film studio, anywhere. And they're self-administered or administered, on behalf of your family or whatever the case may be, and then sent back to our lab for processing. So the capacity model is something that I'm really looking at now early, because we anticipate as we go into 2021 with the new contracts and the new tests that we have, that we need to have access to more capacity. We do it in two ways. First, we add shifts to our existing infrastructure at Kai Medical. We also then buy additional testing equipment to double up that capacity. We have the square footage in our state-of-the-art lab. The lab is a beautiful spec'd out lab. We've got $1.5 million of the latest high-tech testing equipment. And so we have the ability to add more equipment to add capacity. The other thing that we're looking to do is potentially build out a preferred lab network in the US to be able to handle increased capacity that we're bringing to market. We're doing the business development work to gain these big contracts and these big initiatives. We also then have to be able to deal with that capacity model. So the question from your viewer is a very important question. It's something that we're already ahead of right now and working on those plans.
Okay. Okay. So Steve, let's kind of wrap up here. We got a couple people. I think this is an interesting point. I think you should definitely address it. I think you kind of touched on it. Is even with the vaccine, everything else, will we still need tests in 21 and
beyond? So it will be 2021 and beyond. That's a really simple response. The vaccines, whether it's Pfizer, that we're seeing hearing a lot of news about around the world. They just did their first vaccines yesterday in the UK. We expect Health Canada approval very soon, FDA approval. There's a real fundamental issue with vaccines right now. One, you have to produce billions of them, not millions, but billions of them. Then you have a supply chain issue, and then you have a distribution problem to deal with. That is, how does the vaccine get into the arm of a consumer, of a patient? And that is going to take an enormous amount of time and effort, and literally, if you got in excess of 350 million people in the United States, how is society going to deal with that type of volume? And keep in mind that this is not mandatory vaccines. This is optional. The flip side to this is businesses, travel. How do they get back to work and get back to, we'll call it, say, normal operations? How do you know if your colleague in the cubicle beside you is not actively carrying the coronavirus right now and is asymptomatic? Airlines are going to have the responsibility to ensure that their passengers on the flight in the seat next to you are not COVID-19 positive. The only way that takes place is through testing. And I think what we're going to see in our society, this new paradigm, is that a negative COVID result within the last 72 hours will be as valuable as your passport and your boarding pass. And in fact, we won't be able to walk into hotels and casinos. We won't be able to get on airlines. We may not be able to go back to our office and place of work unless we can prove that we actually are not carrying the coronavirus today. So we anticipate that testing will be with us for a very long time, and it's why we invested in the acquisition of Kai Medical.
Okay, I think just in case maybe somebody didn't understand is that, you know, the testing, I mean, people might need a test, like in the case of, I guess, with the production, the entertainment business, you know, at least what, once a week or whatever. How often do they test?
No, the Screen Actors Guild, the union that regulates the film and television production industry in the United States, they require all participants, extras, crew, actors, to be tested 3 times per week.
3 times per week, right? So it's a lot of tests. So multiply that by, you know, I mean, not everybody needs 3 times a week. But
yeah, it's and one of the reasons why the new saliva tests are so important is, imagine if you're on
and nobody wants to get something up their nose.
Yeah, 3 times per week for 4 months. I mean, it's not unusual for a production to run 4 months.
Yeah,
6 months. So the feedback that we're getting, I mean, I've been tested myself multiple times. You know, it's uncomfortable. There's discomfort that goes with it. And so the ability to now collect the specimen in a non-invasive manner through a saliva test, I think, is the next really important step going forward. And again, it's why we've invested in running these clinical validations on saliva tests, because we want to be at the forefront. We want to be a leader in bringing those to market, because I know that the demand is going to be there.
Okay. Let me see. Oh, we got a bunch of people kind of asking variations on the question of the travel bubble. Like what exactly? You know, again, what is it? What, any news? What's, you know, what is this all about?
Okay, so what it's about, I mean, the concept of a travel bubble is, the unfortunate and sad byproduct of coronavirus is the devastation on tourism, on hospitality, on restaurants, on hotels, on the airline industry. And part of the problem for us consumers, as a Canadian, if I travel, I leave the country to go to the US or anywhere else, I'm required to do a 14-day quarantine upon return. This is problematic. People are not traveling even though they want to because of these restrictions. The only way to get past these restrictions is to create a structured testing and contact tracing program. The travel bubble concepts, there's new pilots that are commencing. So as an example, we're talking about travel bubbles that go to the Caribbean. So working with airlines, such as WestJet, as an example, are working on a program right now to partner with the Caribbean and a hotel chain where a holiday traveler or group of travelers agree to a travel bubble situation. So they get tested in advance of getting onto the plane. They fly to the resort. The staff at the resort are all pre-tested. They stay at the resort for the entire duration of the 7-day holiday, as an example. And then that cohort of travelers kind of bubble together. But you get your vacation, you get to go to the beach, you get to enjoy the warm weather down south, and then get tested before you return from the property, come back home, and based on that travel bubble, no longer have the 14-day quarantine. So we're involved in obviously being the testing partner for those bubbles, whatever those bubbles might be. But we're also involved strategically in putting the transactions together in conjunction with partners like Loop Insights and Simply Flying. And it's why we've taken the time to announce these relationships, because they become so important in solving supply chain issues, solving these bubble problems so we can get airlines back again, we can get hotels and restaurants up and operating, and us consumers can feel comfortable that we can travel safely.
We got a great question here. Steve, what do you believe the stock What do you believe the stock is worth today?
Well, you know, providing that kind of guidance, I really can't do. But what I can tell listeners is I'm the largest shareholder of this company, and I'm a completely net holder. You know, even with the excitement that we've seen over the past, you know, week or two, you know, it's not even crossing my mind that that I as an individual would be selling at this point in time. I'm just simply not. I'm holding for the future. You know, this is a massive market. The peers out there are multi-billion-dollar companies. I believe we can be that as well, and it's why we're making the moves that we are, and why we're growing through acquisitions, very accretive acquisitions, why we're expanding out of our markets, not just in the U.S., but you know, obviously into North American markets in Canada, and we're having international discussions now. So I think 2021 is going to be incredibly exciting for us, and so I don't know what that means for the stock price in the future, but I personally I'm just literally holding my position.
Okay, so Steve, you know, because again, you know, hopefully, for the people in the audience who are looking beyond where the stock is going to be, you know, 4 o'clock today, what is your kind of vision for Empower? Let's say, because you got a bunch of cash coming in now, so you're going to be kind of cashed up here, you know, with this you know, growth capital in place. You know, what is Empower going to look like? Let's just call it, you know, 2 years out, which I know is an
you know, my expectation, my goals, the conversations that I have with my fellow board members and our leadership team is we expect to have countless physical locations, clinics, delivering integrated healthcare, and whatever that, you know, looks like for us in the future. We will have an incredibly strong technology layer, really improving our efficiency, improving the delivery of care to our patients. We will have millions of patients, not hundreds of thousands, but we will have millions of patients in our database that we care for. We will figure out how to really use that data, because I think the data aspect of our future is going to be incredibly interesting. You know, think about how we leverage knowledge, how we leverage artificial intelligence to mine data to help understand how to better serve our patients. We already have millions of data points in our database. You know, we have 165,000 patients, and those patients have been you know, running through the business for, you know, almost 7 years now. So imagine when you have millions of patients, and we put statisticians and we put researchers on that data, designing data collection plans and data analysis plans. And you know, I kind of envision having, you know, PhD candidates on top of our data strategies, looking for incredible insights, you know, in the future. My job will be to provide the investment and the focus, obviously bring the right team members on board to do it, but really harness that data to the benefit of, you know, the valuation of our company and our shareholder value going forward.
Okay, so Steve, so let's last question here. Let's kind of recap in terms of we're almost halfway, we're almost at the end of the year now. What can investors expect to hear? What kind of news flow can we expect from Empower next couple of weeks?
Well, really the key updates are going to be around our Canadian clinic acquisition and what's happening with that. So like I say, we're at the final stages. Everything's looking promising right now from a due diligence and documentation standpoint. We definitely will have more announcements related to our saliva tests and the additional new saliva tests that are coming to market. We will continue to update on how our efforts are going supporting the FDA submissions and the Health Canada submissions of the rapid antigen tests. And I think really just, as the very large discussions take place, and we're doing them every day, we're working very long hours every single day. We'll be updating the market and your audience on exactly what these sort of next transactions, next travel bubbles, next initiatives might be. And I think that the audience and our followers are going to be very pleased with even the news over the next couple of weeks leading into the end of the year. And obviously, it's setting us up for a very strong first quarter and 2021.
Fantastic. Okay, Steve, thank you again.
Thank you, Jack.
We're going to catch up with you next week, maybe, or the week after. Whenever you have any major news, we'll have you back. We'll look forward to it. And thank you, everybody, for joining our live stream today. And we will see you on the next one.
Thank you.